The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading.
For over 95 years, we've set the bar. Power, we restored it. Protection, we reinvented it. Record yields, we redefined it. If there's one thing we know at FS, it's that just because something hasn't been done, doesn't mean it can't be done. We're never satisfied unless we take your farming operation to the next level. Run your equipment at peak efficiency and bust the bins this season. Visit fssystem.com.
Well, as the calendar races towards Christmas coming up here next Monday, these markets are largely kind of getting into their holiday mode, but there are some different things to keep an eye on. Soybeans, of course, giving back a lot of Monday's gains during Tuesday's session, while the wheat trade looked to trade higher on the day. We're going to talk about all that and more and get some perspective as we near the end of the year. Joining us for a conversation, Matt Bennett with agmarket.net. Matt, it is great to talk with you again, my friend. Hope you're doing well. And, largely these markets, as I mentioned, it's kind of that holiday malaise time period where things get thin and it gets to be kind of a quiet time in the markets outside of a couple headlines here and there, isn't it, Matt?
Yeah, that's for sure. The thing, Jesse, a lot of times they say, well, if the Bears get Thanksgiving, then the Bulls are going to get Christmas. And I'll tell you, the Bulls are running out of time. Today was, to be honest, kind of a deflating type day. I mean, you come in here and, you've got some losses, but then it just seemed like it just kept on expanding. The bean market down, 16, 18 cents, corn market down a nickel. I think it's just a lack of buying coming in. There's a lack of interest, if you will. And it's a feeling that basically its path least resistance is lower. And you've got to think that's going to be the case as far as corn's concerned, given world and U.S. stocks. But on soybeans, there's still a lot of unknowns. We don't know what's going to happen in Brazil. The forecasts, I think, are a little bit more conducive to production, but they've been so dry. There's a lot of folks out there wondering how much damage has already been done. So it'd be very interesting moving forward how we see these markets trade over the next couple 3 days. Maybe we'll get a little Christmas gift after all, but it's going to have to be after going down.
Yeah, I would agree with you there. Let's talk on this soybean market a little bit more. You brought up Brazil weather, and of course, I think that's the big driver that traders are watching. And I think a lot of traders, as we head towards Christmas and New Year's, they don't want to catch themselves out of position in this market. So it feels like they're largely trying to stay out of it. We maybe took some profit on Tuesday off Monday's rally, but it just feels to me like the soybean market is largely trading fundamentals right now, and until we get some better, more concrete type of news out of South America, Matt.
Yeah, for sure. I mean, I think essentially what's going on here is the trade takes a look at, for instance, what happened last summer in the U.S. We had a lot of crop stress, of course. And, after a couple months of the USDA moving yields lower, you come in November and you move them higher. And I think a lot of folks feel like it's a sign, that maybe we're going to move higher again in January. And maybe, these hybrids were able to withstand some extreme conditions in parts of the Corn Belt a heck of a lot better than what they ever were used to be able to do so. And that's true. We know that's the case. I mean, some of these hybrids are capable, of really, really hanging in there, especially if you catch a little bit of rain here and there. But, you look at, for instance, Brazil, and a couple of these guys have posted that over 50% of the Brazil soybean producing areas have received less than 50% of rainfall since the start of the growing season. And so, that's a pretty significant situation. Obviously we know beans are made later in the growing cycle, but you got to have pods to fill, and so if you don't have really good rainfall, it's pretty tough to be able to build that big bushy plant that we want to build. And, we're seeing some of these early beans coming off down there, and some of the yields don't look all that hot. So there's a lot to be known yet, but the trade is just kind of in a wait and see mode. Like, hey, prove it to me, that this crop isn't going to be great, is the way that it feels to me. And so, I don't know if we have to wait until the calendar turns. I mean, we all know a lot of traders, people who, are market movers, so to speak, have probably packed it in for the year. Volume's down, interest is down. And so we'll just have to see what happens, whether anybody comes in before the end of the year or whether we have to wait until, maybe some new money flows in and calendar year turns here.
Well, let's talk about the corn market too, and then I can kind of come back to managing our risk here before the end of the year. Corn, largely, you mentioned lost about a dime on Tuesday, largely just kind of doing nothing here. I looked at Monday's open interest though, and it made me wonder if some funds are looking to get short this corn market again. I thought they were taking positions off, but maybe not. What are you seeing as you look at some of the funds versus the fundamentals, so to speak, in this corn market right now, Matt?
I do think the funds have maybe added a few shorts. I don't think that they're getting the short position they had before, and I don't think they want to do that just yet. A couple things come to mind. Of course, the safrinha crop is yet to be planted, but the problem in a lot of areas is that some of these beans had to be replanted in some of the safrinha areas. Some of the beans just didn't come up; they didn't have enough moisture, and so with that being the case, it looks like safrinha is going to go in the ground a little later than ideal. And that's very important for the safrinha crop because typically they run up on a dry part of the season, around pollination or so. And after that, rains are usually hard to come by in that part of the world. So, I think that, when you're looking at this corn market, I'll tell you what, it's just been a blasé move lower. It's frustrating. The market doesn't seem like it wants to move. You maybe get a little bit of bullish export information here and there. I mean, last week, sales were strong, but the market just acts like it doesn't want to move. It's almost like trying to push a heavy ball uphill, and it's right now. Again, that path of least resistance continues to be lower. So, we've been looking not only at old crop but new crop. Old crop, you got to ask yourself, what's it cost you just to hold on to this corn? You got to have a game plan, because if it's in commercial storage, if it's in the bin at home, it's 3 cents a month whenever you factor in interest costs. If it's in the bin, most are around 4 cents a month for storage. So, I mean, it's costing you 7 cents a month. Yes, there's carry in this market, but you got to be asking for a pretty nice little cash price rally. Basis should improve, but at the same time, how much of that are you going to eat up with storage and interest costs? So, this is a little bit tougher game that we're playing as compared to the last couple of years. But bottom line is, my personal opinion is at 24, it looks to me like we can lock in some profit margin, whereas 23, in my opinion, is going to go down as one of the least profitable years we've had in some time, because we put so much money into that crop and not enough folks got enough corn sold. I think that's pretty much a foregone conclusion. Most people understand that's the case. I'm not telling you anything that you don't already know. So unfortunately, I think a lot of growers are really going to struggle with that profit margin for 23 corn.
Do we have to be on our toes and have a plan here through the next 2 weeks or so, especially as we work through the holidays? You want to pay attention, but also once that calendar flips to 2024, I'm a little worried, especially in the corn market. We could see a flood of corn, being sold out of the bins on the farm. So I wonder, should we be on our toes and have a plan kind of fleshed out and ready to go here, Matt?
Yeah, I think we should always have some sort of a plan in place. As you know, I'm big on looking at profit margins. Here's the problem, though, Jesse. I think a common conversation with a lot of growers over the last several months has been, with what I've got invested in the 23 crop, I can't sell here. I can't sell at 550, 5.25, 5. Now 450. And I know it doesn't look pretty. I totally get that. If it's in the bin at home, though, maybe it's not a bad idea, to go ahead and sell the carry in the market. Deese goes off the board with a 40-cent carry to July. I mean, that's not something we've seen before. And so, if that's the case, then you go out there and you hedge the July. What do? You're waiting on the elevator system, if you will, the end user, to want the corn more than whenever you entered that hedge. And so if basis is 20 under right now and basis goes to 5 over by the time July goes off, it does not matter what has happened with the market. It does not matter. What matters is what's basis done. And so if basis improves while you're carrying a hedge like that, you're going to make yourself some money. And so, it's one way to lock in $5 basis the board if you can get a rally back up to 5. I mean, we closed about a nickel under it today, but certainly I would look very closely at selling the carry in this market at the very least. Bottom line, it's you're right. There's a lot of corn, in my opinion, that on rally type action is going to reward the market. The hedge pressure could be intense because we just raised what is, according to USDA, the largest U.S. corn crop we've ever raised, 15.2 billion bushels. And if that's the case, and there's only 25% of it that's already been sold, as a lot of people think. Boy, there's a lot of corn to come to market still.
We are talking today with Matt Bennett from agmarket.net here on the show. Matt, you brought up the differences between 23, 24 corn on the soybean side, 24 beans. Getting aggressive at all with some of those 24 beans, or does that come back to the locking in inputs, et cetera, conversation right now?
Yeah, I mean, the way I look at, for instance, 23 corn, 24 corn, first of all, just so I can talk apples to apples, is that, again, 24 inputs are a lot cheaper than 23 inputs. We know fertilizer for a lot of folks is pushing half because anhydrous for a lot of people was less than half, whereas dry isn't quite half what it was a year ago. But when you factor all three together, in some cases, you've got a couple $100 an acre for some growers of relief there. And so I've been telling people, don't just get lazy about your mentality being, hey, I've got all kinds of time on this new crop because inputs are cheaper. Well, what if corn goes to 375? I'm not saying it will, but what if it does? And so when I look over at soybeans, the nice thing about 23 beans is that as we look at profitability spreadsheets, as we look at ROIs, it looks like for soybeans, a lot of growers are in a better situation than corn. We know we're not near as capital intensive as far as putting those beans in the ground. And so those high input prices didn't impact beans as much as what they did with corn. And so a lot of growers are able, if they want to sell $13 beans still, actually make some money there. 24, yes, you don't have $13 beans, but the trap that a lot of us fall into, Jesse, is, hey, beans are only $12.70, $12.60, $12.85 yesterday. I can't sell there because sold beans for $14, $15, $16, in the last year to 18 months. Boy, I mean, what does that have to do with selling 24 beans? I mean, it's literally has nothing to do. What I need to think about, again, is my profit margins. What I have invested in this crop at APH, what kind of money can I make at $12.50 out of the field? I mean, a lot of years would have given her a right arm for $12.50 out of the field. And I'm not saying we won't rally. If Brazil doesn't get any more rain, there's $155 to $165, anywhere in that ballpark. I think that's plenty big enough that you're going to struggle to really rally this bean market.
Ask you about the wheat markets. I know we pushed a little bit higher on the day Tuesday. I know though too, one thing I've learned from you and other folks, if you want to gamble, trade the wheat market. Any notes for you in wheat as we near the end of the year? Is there anything that we need to watch there that could impact the quarter soybean markets? Just what's your thoughts overall in this wheat trade right now, Matt?
The wheat market overall seems like it's been about as steady as any. Now, yes, we've had a couple down days here and there, but overall, it seems like the wheat market's tried to build that right now, this Red Sea situation with bombings and whatnot. I mean, there's certain export paths right now that are very uncertain. And so I think that it's maybe going to keep wheat somewhat supported because people don't know, hey, am I going to be able to get a hold of wheat if I really need to? And so, and of course, you've got U.S. and global stocks as low as what, not as low, but historically we usually run 50% or more stocks to use ratio, whereas that's not the case anymore. And so you've got a little tighter situation as far as versus normal. And in my opinion, that could keep this wheat market supported, especially with China buying U.S. wheat recently. I mean, they've showed that maybe they want to not only purchase, whether it's wheat, beans, you name it, but maybe even stockpile some stuff. And if that's the case, that's probably going to keep you supported. So there's been times that wheat has been the savior, so to speak, of the big three. Is that going to happen this time around? I think it's got a real monumental task ahead of it. I'm not saying that these other two commodities are going to fall out of bed, but it'll be very interesting to see if the wheat situation stays the way that it is, and then you get normalized rainfall in Brazil, what wins out. And I'm afraid to say that, I think that you'd really struggle to rally corn and beans if Brazil gets normal rainfall.
All right, let's talk livestock trade. Cattle first. We got a cattle on feed report coming up here Friday after the close, plus a quarterly hogs and pigs report too. Kind of interesting timing. We're going to get these reports and then head into the Christmas holiday weekend, so we won't have a chance to trade it until next Tuesday. But in the case of cattle, what are you watching for here? Are you worried that this cattle on feed number could give us something, unexpected potentially here that could rile up this market towards the end of the year? What's your thoughts right now on this cattle trade, Matt?
I think placements are going to be a fairly low number from most people that I talk to. Cattle on feed are still probably going to be relative to normal, a fairly bearish number. But Jesse, I'm telling you, we've talked about this. I know there's probably some Mexican cattle that have made their way into the country. Okay. But I don't think it's a big enough number to change the overall trajectory of basically pulling this cattle herd forward. And so, you've got all these heifers that instead of going out to pasture, they've gone on feed for the last 2 years, basically. And I don't fault anybody. I mean, good Lord, what are they worth? They've been worth a ton of money. It makes a lot of sense. Everyone's able to freshen up their balance sheet and get in good situation from a liquidity standpoint. But what does that mean is going to happen? And so here's my hypothesis. And here's the deal, Jesse. I think once you take cattle on feed under 100, it's not going to happen this month. It's highly unlikely. But sometime in the next 3 months, you're probably going to take cattle on feed under 100. My personal opinion is within another 3 months, you'll be under 90. Maybe I'm wrong, but I think it will happen that you're in the 80s. I just don't know how quickly. I think it could be quicker than a lot of people think, especially as I look at the rainfall this last weekend. I look at the forecast coming up this week. It looks to me like the West is going to have a little bit of healing up, so to speak. We certainly need rainfall to continue steadily, moisture in some capacity. But the bottom line is that absolute, horrific situation as far as dryness has started to subside in a lot of areas. That tells me that if pastures are going to look better, you better be real careful as to assume cattle on feed won't plunge. And so I think moving forward, it's going to be a big question mark for some of these guys and gals is, what do I do with a $2,000 heifer if I've got green grass sitting out my door, And I think that's going to be a real dilemma. And not everyone's going to keep them. But more people will keep them than what have kept them when they didn't have the choice because they had nothing for these gals to eat. So, I think overall 24 is going to be a wild year for cattle. And with this economy rolling along the way that it is right now, and the equities being so strong, I think that you're setting yourself up for a potentially really strong rally whenever we do finally get this cattle on feed and placement situation sorted out.
A lot of people have been talking about for cattle folks LRP and using that as kind of a sort of a floor, a protection here with this volatility. Do you agree with that strategy right now, Matt?
I do. I don't sell insurance, but we've got guys and gals actually on our team that do. LRP's been a fantastic product. I think LRP can be enhanced by a savvy insurance and / broker, who knows how to basically, a lot of times you've got a risk versus reward type situation in these deals. I'll take the reward that you want to hand me, and then I'm going to manage the risk part of it. And so, I think LRP is a great tool, and I think you can make it even better if you really want to. But I'm a strong believer that using tools like this to help our situation on cattle is a really smart thing to do whenever you've got so much risk at stake. Yeah, I think the cattle grower overall in the past has been one that's kind of stepped out on a limb of faith, and maybe didn't manage as much risk. You don't know how many guys and gals I've talked to over the last 10 years that have told me, I've never hedged much at all. And I mean, looking at the size of some of these operations, it's shocking, but I think that a lot of folks are realizing, hey, I cannot take this risk. There's a lot of risk going on here, a lot of money on the table. And so I'm a huge proponent.
Well, Matt, we're up against the clock here. We didn't get to hogs, but hogs have been depressing, so I don't know if we really want to go there or not.
But hogs anyway.
Yeah, it's been a depressing. I feel for our hog producers. So I'll just open it up to you for final thoughts here for today. Anything you want to mention again, reiterate before we wrap up the show today?
Hey, you know what? Agmarket.net, of course, the website. There you can find about the conference we've got coming up. And of course, you know about the conference. I'm sure we're going to see you there.
I will be there.
I mean, we've got a heck of a lineup, Jesse. And of course, I'm going to be biased, but I know that I've had people in the industry that have said, "How in the world did you guys put together the speakers you've got?" It's a really good deal. Dan Bozzi with Ag Resource, Dave Hightower, Eric Snodgrass, Joe Vakovic, and Randy Dowdy. It's going to be kind of cool to have a corn grower, a yield chaser, so to speak. Soybeans too. I mean, but bottom line is we've got a lot of good speakers, and you can find that at agmarket.net. And you can get all of our contact info and research there as well.
Agmarket.net. Find out more about that conference coming up in Nashville, Tennessee at the beginning of the year. And of course, all the info to reach out to the team. And Matt, appreciate the time as always. Merry Christmas. Happy New Year to you and your family. And we'll look forward to talking to you again in 2024.
Absolutely, bud. Thank you.
Matt Bennett with agmarket.net. That's going to do it for the show today. Find us online at markettalkag.com. I'm Jesse Allen. Have a great afternoon.